Great. So to kick off, what is the primary role of a bank? If I ask, everyone will say the primary role of a bank is generally that is to or accept deposits, or in another word, I can say those who are having excess money, and we call them in the banking depositors. Those who are having excess money. When we say excess money, there is beyond something extra that they have. Might be a small amount, might be a big amount, maybe multiples of that as an investment or maybe a fund or whatever we can say. Those who are having excess money, in economic terms that is known as a surplus unit, but in the banking jargon that we call them as depositors. So they will be looking for an avenue to make more money, to invest, to safeguard, to keep it like safe. Whenever they wanted, they could be they can get, or on demand they wanted to withdraw and get back their money. So they will be looking for a financial institution. That is what we refer as a bank, right? On the other end that we have is the deficit unit. In another word, we can also say these are the people, those who are going to come and get money, that is borrowers, we can say, right? So when we say borrowers, generally we are saying it could be an individual, it could be a company, or even at a bigger level, multilateral bank or the regional development banks or the like at the international development banks, where even the countries can come and get money as well. So depositors, again, individual companies or the countries. Same goes with borrowers also, those who are looking for individual needs, or maybe the as a company that they are looking for financial needs, or else the country, those who are looking for their financial needs as well. So one side the people are coming and giving the money to the bank, on the other end people are coming and asking for the money. So generally, since the introduction of the conventional or the traditional banking system to the world, what we have seen is basically everything what we wanted to do should be based on interest. So the fundamental principle for a bank or a financial institution to be operative, that is interest. So both sides, one side you promise that I will give this much, that is for the depositors side, and on the other side the borrowers, we will be demanding we need this amount of money. So that is what we call it as interest based banking system, which has been traditionally, which we have been involved with, or which we have been operating in the countries as well. Now today's discussion is going to be revolving basically by redefining the role of the bank through the Islamic finance principles, through the Islamic finance principle, by linking the banking activity with the real economy instead of creating some artificial wealth. So what we mean by artificial wealth, and how can we combine or link and have a direct link with the economy, the real economy of the world. That is what is all about the Islamic banking and finance, that what we are going to discuss. So understanding the primary role of a bank, and then if you are looking at the banking operation little bit detail, in order to accept the deposits, generally the banks, whether it's a conventional bank or an Islamic bank, we will be having the programs for deposit mobilization. So deposit mobilizations, or in another word, we can say where we are accepting deposits based on two types of accounts. One is for the savings and term investments. In the conventional banking, we also have something known as fixed deposits. And Islamic banking terms that we call that as term investments, because the fixed deposits is defined by a fixed percentage to earn profit, to earn interest based on the time period. Whereas in the case of a term investment, which is again the profit is not guaranteed or assured, even the capital as well. So that is what is defined by the term investment is all about. We're not going to go in detail about it, but just for you to understand the different terminologies what we use, there's a reasoning behind it, there is a context behind it, there is a legal mechanism behind it as why we use different terms. It is not just a name game, like they call it fixed deposit and you are calling term investment. There is a clear cut difference between both. Now, that is one way of accepting the deposits inside the bank. On the other end, we also have something known as current account, which is available in the Islamic banks as well as in the conventional bank. Again, one key difference that you can learn: any finance company, leasing company, or an investment company, they can have savings and term investments, but they cannot have current account. Only the banks in the country can have current account, which is an operational account where we will be utilizing in the way of checkbook and standing orders and maybe the overdraft facilities that we have. So these are the two main ways where a bank a bank will be undertaking the deposits. We call that as a deposit mobilization as well. On the other end, once we receive those funds, we are supposed to reinvest. We are supposed to look for avenues to make more return on that. So we can categorize into many areas. I have just put few of them. One is known as a retail banking, where we will be dealing with individuals for their fulfillment of financial needs, maybe vehicle, maybe home, maybe easy payment plans, education, travel, solar, anything you name it that we will be having. So likewise, on the other end, we will be, as a bank, I will be dealing with corporates, SMEs, microfinance, different segments of the businesses, even the listed companies, maybe corporate banking, business banking, SME banking, microfinance, and also we can have, those days we used to have merchant banking, likewise international banking. Likewise, we have, like depends on the segments that we could have other types of the banking or the serving of different segments as well. Likewise, similarly, we have the treasury operations where we deal with exchange rates and correspondent banking, import, export, documentary related ones, and all these kinds of things also taking place under treasury. On the other end, also as a bank, we also will be doing additional services for the people, maybe like any of the modern banking applications that are required, maybe 24/7 call center. It could be guaranteeing, issuing guarantees, bank guarantees, or it could be like private banking, prestige banking, or specialized banking segments, personalized banking, gold safekeeping, and these kinds of nature of services that we will be rendering for the people as well. So if you look at, once we receive the deposits, what we do is basically we go and look for reinvestment with individuals, with companies, with other activities where we will be able to do. Now, the key differentiation between a conventional bank and an Islamic bank will be always looking and working under the principles of Islamic finance. So, few of them that we are going to discuss today, given the time but that we have. Now, if you ask what are the key differences that we have between an Islamic bank and a conventional bank, there are many differences that we can talk about. There are many differences that we can talk about, and once the program is done, I will ask the organizers to share these slides with you so that you can click this link and watch this video, a 5 minutes video clip explaining the differences. In short, if I wanted to say, the relationships are different, the contracts that what we sign is different, the earnings of income is completely different, the way how we design and deliver our products are different. Primarily the conventional banks or the traditional banks, they have been revolving around the interest payments, whereas the Islamic banks will be revolving around multitude of trading structures that we have. So in this nature, there are many differences that we have. Of course, towards the end, I will summarize once more. This is one of the video clip I would recommend you to have a look at it as well. If I put it in short, in terms of Islamic finance, when it comes to financial markets, when it comes to the dealings, I'm not talking about the business per se. I'm here talking about particularly if you are dealing with financial markets. It could be stock market, it could be a bond market, it could be an investment market, it could be a foreign direct investment, it could be a banking, it could be finance, leasing, insurance. You name any of these financial market instruments or the institutions that we have, we must be always away from interest, uncertainties, gambling, speculation, apart from the additional Islamic ethical values, principles, socially being responsible, the matters that have been already instructed on us. So particularly focusing, since the time is restricted, I'm going to focus on one thing that is called interest. So we all know the name interest, right? So interest is defined in terms of time value of money. Oh, in another word, we can say you have lent some money for some a person, where based on the time, effortless money or income generation based on a fixed percentage. There is no effort taken on that, and the risk free. In another word, we can say the premium paid for the money that has been lent. That is called interest. Let me also make it clear the word profit or the definition of the profit is different. Profit, if you see the definition, is basically the outcome of a trading activity. Either it's a profit or a loss. There is a genuine risk that is taken, there is a real economic activity that is taking place. There will be a buy and sell, there will be a buy and lease, there could be a partnership, some sort of a real economic activity that has to be taken for a profit to be derived. So there is a clear difference between, there's a clear difference between interest as well as profit. So these are two different things that what we have in terms of interest versus profit. This is not a name game, it is a complete two different thing. Even you can refer to the dictionary how interest has been defined as well as how profit has been defined. Let's zoom a little on the interest element. In terms of the traditional interest that what we are looking at it, until the last 100 years, the compound interest was not introduced, but before that it has been general use of simple interest. Simple interest, as you could see in this example, it is all about the same amount that will be calculated and taken for the number of years. For example, in this example, 10,000, 5% for 5 years means every year you're going to pay $500 on a yearly basis, for example. That is called simple interest. As you could see in the graphical explanation also, how that is straight, simple. When we say simple, it is the same amount, it is calculated and taken for the every year or for the frequency, maybe monthly, quarterly, biannually, or the annual. On the other hand, if you see the compound interest, which is getting doubled, calculating interest on interest. First year it will be 500, second year it will be 525, third year it will be 550. Likewise, it is going to be getting doubled and redoubled, which has been very clearly stated in Surah Al Imran, saying that be away from doubled and redoubling riba or the interest. From an Islamic point of view, riba, if you just as a reminder, as we all know, there have been four revelations it came about the interest, and the interest has been very clearly mentioned, saying that it is something that you have to be completely be away from. Now, anyone who is involved with interest have to be ready and get ready and get a notice for the war with the creator and his messenger. That is the stand that we have in terms of Quranic ayah. Similar to that, we also have more than 40 hadiths which is directly talking about riba as well. So there are most of the Quran ayah which refers to the riba, which is known as riba al-nasiya, which is related to money on money, money on money. On the other end, the most of the hadiths which is talking about something, another type of riba that is known as riba al-fadl, which means there are 6 different items. We call that as ribavi products, where we have, so these are the gold, silver, wheat, barley, salt, and dates. I'll repeat again: gold, silver, wheat, barley, salt, and dates. So these are the 6 ribavi products where there is a component, if there is a discrepancies in terms of time, in terms of quality, quantity, any benefits that derived without any benefit, without any proper exchange, then of course there is also be counted to be riba. Of course, there are intrigued rules and regulations when it comes to the exchange between the goods. Gold for gold, how the ruling is; gold for silver, how the ruling is; gold for dates, how the ruling is. There are 3 different types of ruling. Of course, this is not the riba sessions that we are having. Of course, there's lessons that you can really learn, and do some further reference studies on that will be very good for you in terms of that. Great. Having said that, from the Islamic point of view, riba al nasiya, riba al fadl, in the conventional banking that we have, or the traditional banking system we have, there are two primarily, that is simple interest and compound interest. But apart from that, in economic terms, we do also have annualized interest, effective interest, inflation linked interest. There are various kinds of names and the calculations are involved. In simple terms, these are the two types that we have. Now, if you ask, can be the compound interest be applicable in the real world? I would like to give you this case study. This is Nigeria. This is what happened for them in 1985. They borrowed around 5 billion. By 2000, they had paid 16 billion. They were asked how much we are supposed to pay more in the G8 summit, and they were G8 summit, and they were told you have to pay another 28 billion. So, can the interest be doubled and redoubled? Yes, of course. That is based on the compound interest system. That is based on the compound interest system, which we are seeing, which is one of the very good case study. The former president of Nigeria, Obasanjo, he said, if you ask me what is the worst thing in the world, I will say it is compound interest. So we have no doubt about it. If you go and get your transactions done, contract signed, taken a facility, or maybe a credit card, maybe a temporary overdraft that you have taken based on interest, the agreement that you sign is basically the compound interest. The more you delay, the interest and the capital portion will be calculated for the interest on interest. Of course, the amount is going to be doubled and redoubled. It will be coming to a period where even you will be paying much bigger, larger chunk in terms of more than your capital as well. So be careful about compound interest as well. Simple interest, there is a definite chunk that you will be paying, but compound interest, that will be doubling and redoubling as well. In terms of religious perspective, whether it's Islam, Judaism, Christianity, Hinduism, Buddhism, you name any of the major religion in the world, almost all the major religions and the philosophies are completely prohibiting the interest-based transactions, or at least highly discouraging you should not be dealing with interest-based transactions. So I'm not going to take that path of comparative religion in terms of interest, which you can do, and these are some of them. And I would like to take you through another perspective. Those who have understood the evil impact or the negative impact of interest, such as the third president of America, he has said interest-based banking establishments are more dangerous than standing army in front of me. Likewise, the seventh president of America, Andrew Jackson, he said, the hydra-headed monster is eating a human flesh, or the flesh. How quicker it will be eating up. Similar to that, interest-based transactions will be eating the businesses. Albert Einstein said, there are seven wonders in the world. If you want to know the eighth wonder of the world, that is compound interest. Henry Ford, the founder of Ford Car Company, he said, it is better that the people, they don't understand how the interest-based economies are working, or the banking system, how that works. If they get to know, there will be a revolution. We had a revolution actually. We had a revolution, one of the last global revolution that we had against the interest-based economy, that was Occupy Wall Street in 2000, late 2008 and 2009, when we had the global financial crisis. So these are set things. I'm just setting the context for today's discussion to for you to understand the reasoning behind why there is need for an alternative banking system to the world. Having understood the benefits of Islamic finance, the former Pope, he said, if you don't want to experience another global financial crisis, another financial, like crisis in the world, then we should be implementing Islamic finance. We should be implementing Islamic finance, because the ethical principles and the values that it holds, it brings the customer and the bank. It brings the economy as well as the banking transactions together, linking. There is a real work that are taking place. There is a real effort that is taking place. So this is something, it was said by the former Pope as well. So just to give you a background understanding, in 2013, Sheikh Mohammed, who is the ruler of Dubai, he introduced the concept of global Islamic economy, identifying seven different areas: halal food, halal pharmaceuticals, halal cosmetics, modest fashion, Islamic finance, halal travel, and also Islamic media and recreation. So these are the seven sectors which was introduced, which is known as a global Islamic economy. Now today we are going to focus on Islamic finance. So if you see the Islamic finance sector, which has been growing over the years, the modern experiment under the legal infrastructures, which was experimented first by Dr. Ahmad Laga in Egypt in 1963, followed by in 1969 in Tabung Haji in Malaysia. Tabung Haji project is one of the successful projects which is still ongoing in Malaysia as well. So since 1960s, where the modern form, when I say modern form, the principles, values, Islamic principles, Sharia rules and regulation with regard to financial transaction remains the same. There is no difference at all. But it is under the modern form, under a legal structure, how that can be done. Like say, for example, if you visit a bank, we have ATM machines, CDM machines, and lots of technological things are there. And how do you send money through internet from one place to another? So these are modern formative formats that we have in terms of doing dealings. This is what we frame it as modern Islamic banking and finance. Similarly, in 1975, the first multilateral bank was founded in Saudi Arabia, that is known as the Islamic Development Bank. First retail bank was founded in 1975 by Sheikh Luta in Dubai, that is known as the Dubai Islamic Bank. That is the first retail bank in the world. Likewise, Islamic finance started spreading all over the world. In Sri Lanka, 1997, that was the first modern experiment was done by starting as the first finance Islamic finance company in Sri Lanka. So since 1997, even in Sri Lanka, which we have grown big, which we have grown big. Understanding of the size of the industry, how we are growing, how many financial Islamic financial institutions are there. It is no more a small industry. It is no more a niche market. It is the necessity of the ill economies to look for an alternative. So, if you look at local industry in Sri Lanka, we have Islamic banks, we have Islamic financial institutions, we have Islamic insurance companies, we have Islamic capital market, we have Islamic banking studies, we have an association that is representing the industry. I can put together in total, summing it up, there are IT firms that are helping Middle Eastern Islamic banks, IT firms available. So if we put together, I can say easily more than 40 organizations are involved in this industry. In terms of PhD holders for Islamic specialized in Islamic banking and finance, I can easily name them around 7 to 8 of them. Sri Lankans, those who have specialized and done in terms of Islamic finance, PhD holders, Sri Lankans. So Islamic finance industry, not what we have been seeing in Sri Lanka 10 years before. It has evolved. It has becoming to the mainstream. It is directly competing. The services are being offered, and Sukuk, which was listed in the Colombo Stock Exchange, which is available for you. You and I can buy and sell as well. So, with this context setting, that is, what is conventional banking, what are the key differences that we have, and how Islamic banking have been evolved in the world as well as in the global market, let me quickly run through the three things that we want to talk about. Number one, redefining the risk. So, let me take one example. Imagine, imagine the expressways in Sri Lanka that what we have. Current understanding is all about we have requested the multilateral organizations. We have requested multilateral organizations to come, and we have provided the land, and where they have put up the road. They have put up the road. Am I audible? I hope I'm audible, and also no issues in the connection. Okay, thanks so much. Great. So let's take the example of expressways. So we have plans for 9 highways, and few of them are already done. So basic understanding is either build, operate. There are government projects. When it comes to the government projects, what we have is either couple of options are there. That is in terms of build, operate, own. That is called BOO. Build, operate, transfer. That is second one, bot. Or mostly nowadays is what we do is public private partnership. So these are the three things that generally we do the government projects. So what we have done in this case is basically we have obtained loan as a government, as a country. We have given the land and they have put up the road, and the toll fee we have an understanding for, like taking it up, which is as a return for whatever the capital they have pumped. Now we had a situation. What was the situation? We had corona. When we had corona, uh, whether the road is performing, when I say performing, whether people are using that road and paying the toll fee or not, irrespective of that, the interest clauses are there, they saying we are supposed to pay, because it's a loan that we have obtained to put up that road. So we had a corona period, let's say 6 months period, nobody is using this highway, there is no return at all. Still, as a nation, what we are supposed to do, we are supposed to pay that, the capital as well as the interest. Sometimes they might give us a grace period, but of course that grace period also will be counted with the compound interest as well. So I'm not going to further talk on that, but you can think about it. What is the alternative for this? We have a product that is called Sukuk for mega infrastructure projects, and all over the world people are using it. In 1998, Germany was the very first country, very first non-Muslim country to utilize the Sukuk, Ijara, leasing-based Sukuk or Islamic bond to bridge their budget deficit. Germany was one of the first countries to utilize this. So the point is very simple. In Islamic finance, what we do in such situations is that we take up the share, we take up the risk. We say, okay, the asset is not performing, so let's bear that. Let's bear that. Okay. So if this expressway was structured under a sukuk, that also particularly based on the maybe a mudaraba, is this now, whatever the sukuk that we can name it, depends on that. Slightly the feature might be different. If it is based on a musharaka or mudaraba sukuk, obviously the risk, the non-performing of that particular road, there's no toll fee collection, we have no problem, so let's bear that period. We are not going to be demanding, saying that we need these, like no matter what happens. That is the way that interest operates generally. So we directly link with an asset or a project where that has to perform the returns that we will be sharing. So that is the understanding that generally goes under Sukuk, which is for mega infrastructure projects. So the risks in Islamic banking or Islamic finance principles, which has been redefined. All these days it was based on interest terms. Now we are talking about, now there is another way that is known as risk sharing. That we have. Now, one of the case study that you can learn how the risk is particularly working. Pairings Bank is one of the good case study that you can learn. So given the time interest of the time, I'm just going to go quickly telling you the story. There is 28-year-old Nick Leeson, who was a derivative manager sitting in the Singapore branch of Barings Bank. Barings Bank have been operating for 200 years. He was able to put the entire bank down because he was, he was taking up too much of risk, where the bank had to close down to pay off the liabilities that was created by him. That is why Warren Buffett says derivatives, which is an interest-based financial conventional instrument, which is a time bomb. Parties, those who are dealing, don't know when it will burn, when it will be bursting. So this is what happened for Barings Bank. This is one of the good case study for you to look at how conventional banks are treating the risks, and maybe with the customers, or maybe that they are getting exposed to, up to the extent where the banks are completely shut down. So this is the first aspect that we want to talk about in terms of having a different weave, re-looking at an alternative that we have. So we encourage in Islamic finance not risk transfer, rather it should be a risk sharing linked with a real economic activity. That is number one that we want to talk about. Number two that we want to talk about, let's take again an example for us to quickly understand. There's a farmer who want to build up an organic greenhouse and build grow organic vegetables, looking for a financing facility versus a tech entrepreneur who want to build up a mobile app. That mobile app is primarily going to be serving as a betting and gambling app. If that is the case, whom we will be dealing with, whom we will be enabling the financial facility, it has to be obviously not for the betting, gambling, speculation, interest. We are not going to do any financing for them, but we will be looking at the farmers, those who are ready to do something of this nature. So this is what we are talking about reward. When we say reward here, as a bank or as a financial institution, what is the more lucrative, guaranteed, and assurance that we have is the tech entrepreneur. But there is a huge risk with the farmer. But still, the Islamic banks have been, we have been encouraged to go with the farmer and completely prohibited the area of gambling, speculation, betting, nightclub, casinos, and all these things what we have, which is completely prohibited because that is going against the social norm and making harm for the entire community. So this is what we are talking about in terms of Islamic finance, right? So we make profit through the real economic productive work that we do. We cannot make money based on game of chance. We cannot make money based on financial manipulation or speculations that we have. That is completely prohibited as well. So every income generation has to be taking some form of risk, as well as some form of risk, as well as it has to be something linked with the real economic productive work as well. So that is in terms of if you really look at the conventional market, that is not the case. Reward is basically, as a bankers, we are to just wash off our hands. This is the interest rate you have to pay me, whether you what you do with that I don't mind, but I have to get this money. Same thing on the other end, we will be saying here the money, but I want this amount of money back. I don't mind what you do, whether you suffer, whether you do good, no problem at all, but I need this amount of money. So that is what we are looking at in the conventional, which is not the case in Islamic finance as well. So if you see the gambling, which I was just taking the example of earlier, which is expected to go another 10% after the corona and everything, the countries are back, and this is particularly mobile app based gamblings are becoming higher than the nightclub and casinos and all of that, where they have gambling games and all of that. That has becoming traditional. But of course nowadays it is becoming more and more, the mobile apps are becoming internet based. Gambling and speculation games are becoming more. I just wanted to give this as a precaution and the warning for all of you, just to get you an understanding of that. Similarly, central bank also have prohibited different kinds of financial schemes that are prohibited within the country. Number one, Ponzi scheme. Number two, pyramid scheme. Likewise, high yield investment program. Similar to that, cryptocurrencies as well. So keep that in mind. These are completely prohibited in Sri Lanka in terms of within the country. We are not being able to uh, buy anything, sell anything, promote anything, being an intermediary for any of these kinds of nature of this as well. Time to time, the Central Bank of Sri Lanka also publishing notices, the companies, those who are involved in this, and to be away from that as well. So these are just I wanted to share with you, because as much as the gambling, speculation, similar to that, these financial schemes are also a form of a reward. Sometimes we tend to go behind, which is completely prohibited in Sri Lanka also, of course in Islamic finance as well. The third thing that we have been trying to talk about in today's discussion is about the responsibility. Now let's take an example. A school principal looking out for a bank to fund the expansion of classroom facilities versus a wine store manager who looks for a capital to open a new alcohol saving launch. Who will be getting the financing? Obviously we know, right? So that is a school principal, no under any circumstances for the wine store manager. Why? Because that is against the principles of Islamic finance. So we will be always omitting, we will be being away, we will be completely being away from whatever Islamic banking and finance says you are not supposed to be involved, right? So we believe Islamic finance, we believe in a moral, ethical, social values. We wanted to build, not just being a financial intermediary, we wanted to build a society which is very, which is more valuable in terms of following their ethics and following the moral conducts. So this is directly linked to something known as Maqasid al-Sharia, where the purpose of Sharia, the objective of Sharia, there are codes of conduct as what needs to be done when it comes to social responsibility as individuals, as institutions. As individuals, as institutions, how are we supposed to operate? So these are some of them, and I'm not going to talk everything here. Just for you to get an idea of when I say we have to be, as a financial institution, as a bank, we have to be really careful in all what we do, is basically to be away from nightclub, casinos, gambling and alcohols and all adult entertainments, smoking and all these kinds of things. On the other end, we also should be doing things that needs to be based on profit and loss sharing, based on the people friendly solutions, risk sharing, participatory models, complete prohibition and being away from interest, speculation, gambling, and all of that. And similarly, it has to be something economic productive and asset backed financings as well. So these are some of the principles that we have in terms of what needs to be done and how an Islamic bank or a financial institutions will be operating. So far we have discussed three important things: how we are looking at the risk, which is little differently, that is risk sharing; how we are looking at the reward, not any means that you make money, there is a code of conduct, there is a way of earning income which we have to follow. Similarly, responsibilities, we take pride decisions. When I say pride, of course, not in the bad sense, in terms of good decisions, when we are comparing ourselves with the traditional financial market what we have, they will make money, there is principle, as long as within the boundaries of the country they will try to make money in any of the way. In Sri Lanka, getting a gambling license or the nightclub license, where licensed nightclub can obtain a bank loan, of course from a traditional bank, not from an Islamic bank, not from an Islamic financial institution. So this is what we are talking about. Why? Because we are safeguarding morally in our credit policies, in our policies, management policies in Islamic finance. We have very clearly articulated saying that we are not going that path, right? So finally, as a reminder, I would like to share there are many differences that we have in terms of looking the bank beyond the interest means, which is conventional bank, which are made, the principles, the rules and regulations and practices and the banking law, all of that are man-made principles, whereas the Islamic banks are also following the Sharia principles while safeguarding the rules and regulations within the boundaries, which is not contradicting, which is not violating the principles of operational in terms of as an Islamic bank. Similarly, there is no religious guidance in terms of conventional bank, whereas in Islamic banking, there's a very clear religious guidance in terms of what needs to be removed and being away from. Likewise, risk, we spoke about it. Reward, just now we had a look at it. Likewise, the social responsibilities that we have. Likewise, there are ethical principles, human well-being, how they treat money and how we treat money is completely different. So today, given the time, we have discussed only three different aspects with one example, just for us to grasp the idea of there are banking system which is banking beyond interest, which is the alternative system or alternative ways of looking at the risk, looking at the reward, and looking at the responsibilities that what we have. Likewise, I'm just going to share of three case studies. Those who are interested, you can refer and look at it. When I say redefining the risk, what we are talking about, for example, like in Indonesia, this is one of the court case in Indonesia, Musharaka, there have been a dispute about the profit sharing ratios, and then there was a fact check done by the people, and then the Supreme Court, they gave the ruling saying that the bank must also bear the loss. So this is what we say, redefining the risk. Similar to that, we can also see a redefining the reward, where you can't earn money as you think. There is a case study in Saudi Arabia that's about murabaha, late payment dispute, where there have been penalties after penalties have been imposed on a customer. Customer went to the court, and then they said yes, this can be collected, but that's not as an income. This can go as a charity, because charity is only valid. Otherwise, you just waive off. So this is again a good case study in terms of as an Islamic bank. But if it is a conventional bank, that will be an income for the bank. But in an Islamic bank, late payment, if there is any charges, that has to go to charity, or there is another opinion on that where it can be also recovered if there is any actual cost it has been involved in terms of recovery of that as well. So these are different opinions on that. But of course, what you can see here is clearly not as an income to the bank, it has to go as a charity. Third thing that you can see, this is one of the recent case where, not recent actually, it is evolving from 1980s. Pakistan had a Supreme Court ruling complete prohibition of interest within the country of Pakistan, building the Islamic economy. And by December 2027, the banking institutions cannot have involvement with interest. So this is what we are talking about, redefining the responsibility, because we know interest is harmful. So as a country, this is the first country after Sudan. This is Sudan, Iran, and these are the countries where they have constitutions. They have rules and regulation. Through the jurisdictions, they are saying riba is completely prohibited. So these are three case studies where you can further go, those who are interested to learn in terms of relooking at a different view in terms of how Islamic finance is defining the risk, reward, and responsibilities. There is a book by Maulana Taqi Usmani, The Historical Judgment on Interest, which is, of course, you can read as an additional thing on the same court subject matter. Likewise, those who are interested, you can read these three books. As a startup, there are courses in Sri Lanka which you can go and like enroll yourself with. Likewise, these are some of the online resources that you can keep your tab, keep yourself updated. Likewise, there is an alternative association of alternative financial institution as a local association for all the Islamic financial institutions together. So you can be part of that. You can obtain the individual membership there as well. So with that, I would like to bring to the conclusion, opening the floor for any Q&As if there is any, and also handing over to Sheikh Saraf and Sheikh Sajid. If there's any questions, you can put it. Sheikh Saraf or Sajid, is there any questions?
Yes, so far we don't have any.
Okay.
Yeah, please, if you have any questions, you can talk in the chat box, so you can unmute yourself.
Any questions? So we are here. If you have any questions that we can answer to you, if there's any doubt or how that works, how this work, if there's any questions. Great. So I believe no questions. Right. So let's wind up. Yep. So what I wanted to say is, maybe as the last final note. So Islamic banking or the Islamic finance or the economic system is completely different from what we have or what is existing. And for you to learn and for you to have further reference and studies is where I have shared the things with you, and which I will ask the organizers to share with you, those who are participating. Can share the slides which I will share with them. What you have to understand is, we have just triggered interest in you. There's an alternative way to look at. There's an alternative way to look at and everything what we do in terms of financial dealings. So here today we have been taken the especially three different areas to look at. One, how Islamic finance looks at the risk. likewise the reward or earning income, as well as the responsibility as a financial institution. So this is what we had a look of, and I believe it has been fruitful for you, and enjoy the time that you have been with me. And it has been a pleasure being with you all and sharing whatever I know and whatever I've been experiencing as a knowledge sharing session. And again, once again, thank you so much for Ummat for organizing the second webinar for me. And would like to hand it over, Jazakumullah Khair, and would like to hand it over to Maulana Sharaf and Sajid.
Jazakumullah khair, Brother Muath. So it's been pleasure having you again, and thank you very much for sharing your thoughts. And it's a very pertinent topic, which we definitely have to expand, inshallah, in the further. And I hope our listeners and audience would have benefited today. And until we have you again, inshallah, we'll see you again, inshallah.
Okay.
Assalamu
Assalamu
alaikum.
alaikum.